Alrighty, what's going on, everybody? Happy Tuesday. How is everybody? Bear with me one sec. Actually, you know what? It's not Tuesday. It's Wednesday. My bad. Man, you see how often I freaking do this not on a Tuesday? All right. Well, it is what it is. Happy Wednesday. So yesterday was Valentine's Day. And yeah, there was no way I was getting out of, doing that. So how was everybody? Can you guys hear me? Hey, what's up, man? Thursday in London already? Yeah, I guess. Yeah, right. 12:07. Sounds good. Let's dive into it. A lot of news, right? A lot of news came out this week. A lot of fundamentals to digest. Personally, I can tell you that my bias of bullish dollar is still remaining. Nothing in any of the data that's been released would give me any reason to believe that we are going to see a pivot. We're going to see a slowing of any interest rate hikes. And yeah, I mean, the way the dollar is going to take us is how the world economics is going to really play out going forward. So let's get into it. I'm going to kind of give you like my bias of what I am, what the overall bias is going to be, in my opinion, and then kind of how I'm going to be looking at it from a chart perspective. I can tell you that just with the amount of stuff going on this week, I'm really just focusing on some of the majors. I'm more interested in like EU, AU, NU, and UCAD personally. And yeah, and we'll kind of go from there. So hopefully everyone's kind of caught up on the news. The consumer price index came out. That was that was definitely a little bit of a shocker that we did not see a decrease in inflation. Shocker, not really. I talked about the price of eggs being up 70% year over year. You've got things, I mean, everything is up. Inflation is still very, very much prevalent in the United States. And that's the whole point of understanding the fundamental economics behind it, that, the Federal Reserve is not going to ease up on interest rate hikes until they feel they've got a handle on inflation. Until we get that annualized inflation rate down to a 2%, we're not going to see any kind of pivot, meaning the bond markets are going to continue to scream upwards. If bonds continue to scream upwards, you can see a depreciation in equities, and it's that simple. So, with that, that's kind of like the bias point. Coming into the rest of the week, we do have on tap in about 30 minutes, we do have the Australian jobs report coming out. So I am going to be very curious to see what comes out of that. Personally, I think we're going to just continually see a increase in the labor market, right? The labor markets are going to continue to be strong. I feel. I can't really speak of what's going on in Australia, but I can tell you the labor market in the U.S. is going to continue to show just strength in itself. But what I'm really going to be interested in is going to be the inflation numbers coming out Thursday morning. That's going to be really, really key for me, because you can already see that they're pricing in 0.4% month over month. And on core month over month, they're calling in for a 3%. A 0.3% increase, which still shows that they're pricing in increases in inflation. Nothing about that is telling me that the Fed is going to start to, again, what the key word was pivot, right? A lot of analysts were talking about, a pivot being in the near future. I don't see that. I don't see a 2023 pivot. So, on tap, that's pretty much it. There's not really a lot of other volatility coming out. The Australian news is going to subside here very shortly. Realistically, by the time London comes open, we're probably going to be in a position to mitigate whatever manipulation Australian news gives to both the Kiwi and the Australian dollar. And then going into next week, right? Big holiday here in the US on Monday, big holiday in Canada as well. Actually, what is the Canadian holiday? What is the Canadian holiday? Family Day. All right. Yeah, in the US, it's President's Day. It's just a conglomerate of all the US presidents that had birthdays in February. So it is a day off. And you can kind of see going into the next week. Big things on tap for me are going to be some inflation numbers coming out of Canada. Anybody here or anybody know why that's going to be a pretty big number? Why is the Canadian inflation going to be something of importance for us to really pay attention to? Anybody know? Nobody? Come on, I know some of you guys know. I see Chad is on the call, man. You live in Canada. Why is this important for you, bro? Will influence whether they continue to, well, they haven't paused the rates yet, right? They haven't paused. They said they're going to. They said they're going to take a pause. So this is going to be very key to see whether or not they are going to pause it. And you can see that they're calling in for CPI month over month. They're calling for a 0.6% decrease, man. You tell me, you live up there. You guys seeing a decrease in the cost of goods and services? Yeah, I didn't think so. So yeah, next week we're going to definitely see. I'm very interested to see because I think Bank of Canada is going to have some egg on their face from it. And of course, that evening we're going to have the cash rate, what the rate's going to go to on the New Zealand dollar. So not tremendous amount of volatility going into the next 2 weeks, but still enough to kind of keep a really good picture on what the economics are going to do. I think going forward, I think on the US side, really the only thing we're going to see tremendously involving some fundamentals is going to be obviously the March jobs report, first week of March, and then the FOMC meeting that's going to happen at the end of March. And that's going to be really what's going to predicate where the US dollar goes. I think from now until then, we're just going to continue bullish. So do you not believe that the effects of interest rates are delayed for the data incoming? There is a delay to it. Yes, correct. There is a delay to it. Yeah, I mean, so do you understand what the rate hike, right? So like say what is that rate hike? What does that represent? Because it's not the true interest rate, right? It's the overnight Fed rate. So I guess what would be the point of the question? Is it that, I mean, to answer the question, do I believe that the effects of interest rates are delayed? I do. Yes. The central banks, though, cannot afford to be lacklustered or to be delayed, right? Because just because there is the delay in that, let's say that they pause rate hikes in March, and then the April inflation numbers come out and we've just doubled what the forecast was supposed to be. So now we're already a month behind, and now we've got to jump a month ahead. We're always going to be catching up to try to offset that increase. So if like, especially if you listen to what some of these press conferences that these chairmen and presidents of these central banks are speaking of, that's exactly their point is, I can speak exactly for what Powell has been talking about is he cannot afford to be wrong. So how can they make sure that they kill inflation, right? How can you make sure if you ever go hunting? Let me ask you guys this question. Any of you guys have ever gone hunting? Whatever you're hunting, whatever prey you're going after, all right? What's the easiest way to ensure that that you put it down? Is it by just putting one bullet in it or by multiple bullets? And that's how you got to look at the Fed, right? The Fed got to essentially make sure they're yes, there's a little seesaw effect to it where they can't put too much weight on one side, right? They've got to even out those scales. However, the labor market is telling them go big, leave the 9 millimeter home, go out with the 30-06, right? They're saying the labor market can withstand that, can hold up their own from these numbers that we're seeing. They can go out and they can start increasing these rates at a higher rate in order for inflation essentially to be, to be curtailed. So like the data is good now because the actual effects of the increase. Yeah, exactly. Yeah. So, I mean, the data isn't good. I mean, that's the problem though. I read, what was the article? Well, actually, I mean, I put it in my blog that I dropped this morning. So this is something I shared with a couple of people the other day. I think it was yesterday morning, man. I don't know. I've been up for a very long time. Hold on. Where was it? Here, was it this? CPI data. Hold on. Yeah, right here. So just so you guys know, and this is verified. This is what I was able to pull from two sources, independent sources. The December report showed that it was a negative 0.1% decrease in CPI data. When it was revised, it actually showed a 0.1% increase. So it was off by 0.2%. In November, it was reported as only a 10% increase. It actually was a 0.2 increase. In October, they showed 0.4. It was actually revised to 0.5. September showed 0.4. The revised version actually came in at 0.4. August, 0.1 revised was actually 0.2. So their initial data is skewed. It is wrong. So, and it makes sense because when you're at the, when you're actually looking at the goods and services that you're paying for, you're not seeing a decrease in these. So yeah, it is what it is. But okay, so let's dive into what the charts are showing. I'll be honest, I didn't take any trade today. I was inundated with some other shenanigans, man, getting stuff done. So this is going to be the first time I'm looking at the market today from this morning. You'll kind of see my thought process from this morning of what I was looking at. So yeah, let's dive into it. Let's start off with the dollar, right? One of the things, again, I spoke about the bond market too, and the 10-year are the big things that we really want to pay attention to. And just looking at what the dollar has done this morning, we saw that the dollar ultimately confirmed the reaccumulation by taking out this high, and again showing massive strength. One thing I am watching though is the supply area to our left, right? And you can see I've already got it marked out. I've got my alert here because I want to see what happens when we get into this area. So if the data is skewed, how do you know what's real? So that's another thing. This is so someone beat me to the punch. I was gonna do a blog on this, but I figured, you know what, someone's already done it. I'm trying to remember. Hold on, where came out at core retail. I want to say it was. Hold on. Let's see. If I find the article, I'll share it. Give me a sec. Let me look over here. I'll look at my history because I had it open. I know it was like this morning. Bear with me. Hold on. So it was before I was looking at monitors. Coincidentally, I did not break a monitor. So let's see. Here we go. Was it here? Yes, here we go. All right. Here, I'll open it up here. I'll share this article too in the chat for those of you guys that want to peruse it. So This is the issue. Not only is the data coming out of the labor market and out of the oh shoot uh, labor market and the Census Bureau, we're seeing these surveys that they're using for all this data to be just wishy-washy, right? We're seeing that they're picking and choosing what data fits the narrative. So, the biggest thing is there's no consistency in which surveys they are using. So yeah, I mean, the data is skewed. And I think really what you need to do, or at least I could tell you what I'm doing, right? I am not going single source, right? I am going multiple sources, going 4 or 5 different outlets, and also just kind of using a little bit of common sense, right? The biggest thing that I can say that I'm doing is I'm not making long-term decisions based off of these short-term responses, right? Remember this, like the market's never wrong. So what's the market telling us? And at this point, when the market came in and started accumulating, right? What it's telling me is it's going to make a run for this. And if we take this out, it's going to make a run to go even higher. So I'm going to play in between the numbers. All right. But on dollar, right? What are we seeing? We're seeing a massive amount of buying coming in. We are seeing, it started down here. We saw some divergence. We saw the reaccumulation that happened. And more importantly, in the bond markets, right? We saw the 2-year just go ridiculously stupid high. All right. It was actually pretty nice to see before the data came out. I really wanted to see us kind of come back into this. We did it beautifully. And with that, we just saw massive amounts of buying coming in on the 10-year as well. The 2-year already has kind of confirmed for me the bullishness that I wanted to see. Same thing on the 10-year. All right. 10-year comes in perfectly into here. We get the nice little push. We reaccumulate again. But more importantly, what I'm waiting for on the 10-year, and this is something that I've got my alert on, I'm waiting for this break. Just like on dollar index, right? I'm waiting for us to take out this area of supply that created this new low. If this alert goes off, I'm going to expect, and this alert, I'm expecting, the anticipation is that this alert will go off before the dollar index's alert goes off that we take out this high. So if I know the 2 years already broken, if the 10-year breaks that high, I don't care what goes on here because I know that this is not going to be withstanding. I have a very good likelihood that DXY is just going to take out that high. So I am going to be looking for continuation to the upside on dollar. And realistically, nothing's changed from my bias this morning. I'm going to be looking for one of two things. What I really want to see is I'd like to see us sweep out this Asian liquidity and trade into our news manipulation. Now, this may be wishful thinking because I don't know if there's going to be enough to get the market down there, right? However, we already saw that price distributed up here during New York today. Potentially what we could see is price coming back into Frankfurt and London's price action. If that's the case, what I'm going to be doing is I'm not going to wait. So ideally, this is what I'll do. I'm not going to try to catch the bottom. So let's just say hypothetically, price comes in and accumulates, right, inside of our London Frankfurt price action, right? Then what I'm going to do is I'm just going to simply wait for the reaccumulation. And once we get the reaccumulation, I'll play mitigation of the reaccumulation to take it up. At this point, when we're here, we're in the up cycle, and that's enough for me, right? The two things that I'm going to want to confirm before I get into an entry is going to be, one, have we accumulated? And have we now confirmed reaccumulation? That's one. The second is, has that reaccumulation taken out supply? So if we started to take out supply, that's going to be enough for me. That's going to confirm the upcycle. So if the market is always right, does that mean the saying, don't fight the Fed, is wrong? Don't fight the Fed. keep hearing that, but it doesn't seem like the Fed is in control of what the market does at all. So let me ask you a question. Who do you think is going to win at the end of the day, the market or the Fed? Exactly. Yep. So, like what I've been saying probably the last, man, I don't know, probably the last like 2 months is the market is very resilient. The market is shrugging off, but at some point, Papa Powell is going to smack it down. And that's why, you look at some of these crypto markets, you look at equities, you look at some of these currency markets, and I'm not buying it. Especially if you're stuck in that smaller time frame, look at the big picture and just wait. I mean, that's really what I'm doing, especially from like an investment standpoint. I'm just waiting because I know the writing's on the wall, and eventually, you can say, oh, the Fed's going to pivot. Oh, the Fed's going to, because that's really what the anticipation is this is early investors. This is early money that is trying to get the bottom. And man, the Fed's not going to pivot. I mean, especially with the strong labor market, with inflation still out of control, they have everything in their tool bag. They have the green light to, in my opinion, we're going 50 basis points in March. We came 25 right in January. They essentially said that we're gonna remember the keyword disinflation, right? That's what Powell said, disinflation. The Any of the data that we're seeing right now showing disinflation? No. So I think at this point, I think they've been very hawkish, right? Their tone has been very hawkish. Their policies that they're implementing very hawkish, yet the market is treating it as dovish. And just listen to any of these news outlets, man, and they're talking, they're like, man, we don't understand why the market's doing what it's doing. Well, the market's doing what it's doing for a reason, right? There is a rhyme to the reason. And the one thing you don't want to do is you don't want to be the last person when the music stops without a chair, because I can guarantee you the market movers are going to have a chair, right? When the music stops playing, they're sitting down. And the people holding the bag at the end, standing up, are going to be the ones that are going to be leaving with a bunch of tears in their eyes, right? So, do you think Powell will be asked about these? No, because he does nothing with those numbers, right? So how all of these numbers are tabulated. So remember this, okay? You're talking about two different entities now. Without saying too much that this video will get, detrimentally impacted by the YouTube screeners. The Fed is its own entity, right? The Fed is the central bank. The central bank does not calculate, tabulate, or release any labor market numbers, any inflation numbers. They don't do anything. What they do is they essentially, what's the word? They analyze the data that's given to them, and based off of the data given to them, now take some sort of action via monetary policy in order to do one of two things, right? The Fed, every central bank's job is very clear. Their job is to control the flow of circulation, money in circulation, and to essentially protect the value of that money. And how do you do that? By curbing inflation, right? Inflation devalues your currency. So they are ultimately responsible for the wealth of the central bank. They don't care about the labor market. They don't care about inflation, but they have to take those things into account in order to what? To protect their investment. All right. So yeah. Anyway, dollar index. This is kind of my thought, right? So if this is what I'm doing with dollar index, then it's very simple on what I'm going to be doing over here with EU, right? EU, very, very similar. We had a little bit of divergence earlier in the week because EU had already confirmed this. Actually, hold on. Maybe it's on the 30-minute. Yeah, there we go. So EU had already confirmed for us the divergence where dollar index had not taken this low. Now we're just into it, man. We just started. We talked about dollar index. The cliff notes on it are don't fight the Fed. The Fed's going to win. So rate hikes are going to happen. Anyway, we can see that ultimately we have a massive redistribution in the making, right? We do have a shakeout that swept out Asian liquidity here and swept out weak-handed sellers here. So what I wanted to see, and we've already done it, right? We've already broken this low on the dollar index. So dollar's driving. I don't necessarily need us to take this low here in order for me to start shorting EU because dollar's already shown me that strength. So from there, it's very simple. Like, where do I want to get involved in something? Well, the most probable location that I want us to come back into is going to be into the news manipulation, into the distribution that occurred up here. All right. I don't know if we're going to be able to get up there. I don't know if there's going to be enough support from buyers to get up there on EU. So knowing that as it stands right now, the only thing I'm going to be watching is the most recent redistribution, right? We had an accumulation of orders. We had the distribution. The only thing that makes this less probability than I'd like is there's no manipulation, right? It didn't manipulate anything to the left. So it is what it is. And you already see that we've kind of accumulated here, just like we distributed on dollar index. So same thing goes in. We come up here, come into either and pretty much all I did was just measure out the entire redistro, come into at least the 50%. We start to see a distribution. I don't need to catch the top, but what I do want to see is the next redistro. Then I'm ready to go, because at that point, especially like I said on dollar, if we've distributed and we've redistributed, we are potentially now in the down cycle, as long as we can say that we've taken out some kind of demand on EU, right? So that's what I'm going to be waiting for. If we can get something up here, great. And again, if we don't, maybe we get the old Frankfurt sweep that confirms redistro, and now I'm going to be playing out of this to do that. All right. Those are really the only possibilities that gets me into the market on EU. All right. And of course, targets for me are going to be pulling this down. Let's get up to like the hour. There we go. Targets for me are going to be getting down, and I'm going to be obviously taking some partials once we get into around like this 105.60 level, because this is ultimately what caused this move. I'm going to take some partials. If we can break through this area of demand, fantastic, because at that point, it's going to be smooth sailing. At that point, that's where we can potentially see a run on the like 9,500 level down here. And that is a long way to go. But I'll tell you right now, March's federal funds rate comes in at 50 basis points. I can guarantee you that whoever wants to join me on these 1,100 pips, we're going to be smooth sailing coming down. All right. So that's kind of where I'm going to be looking to take EU. All right. On AU and NU, right? AU, actually, we just had the jobs report comes out. I am too, man. I'm gonna make sure I don't miss it. So we just had the jobs numbers come out. Actually, let me just see what the jobs numbers were. It obviously was not that important. So we saw an unemployment rate increase of 0.2% over forecast. And wow, this was a huge miss, man. Look at this. They were calling for plus almost 20K jobs. They actually lost 11.5. Good night. Labor market is not doing too good over in the Australian peninsula. All right. So AU. What do I want to see on AU? You can kind of see like my thought process. I wanted to see if we can at least get back up into here. I'll tell you right now, after the labor market statistics, I'm not seeing that. What I am ultimately going to be looking for, and I think more of a short-term play, is We potentially, yeah. So potentially I want to see us break this low, right? I want to see us break this low. This puts this distribution, which swept out all of this weak-handed sellers. That's put this, that's going to put this in a pretty much maintaining the order flow of that. All right. And once we get that break, it's going to be either play the pullback or play the continuation move. And realistically, maybe we'll see something set up during London. I think, yeah, man, there was no manipulation. I mean, maybe if we would have swept or something like that, but realistically, what I'd want to see is, I want to see this break, because as it is right now, I'm guessing we just went right into 80% of this thing. That's what it looks like. Just shy of it. Yeah. Is there divergence between that low and NU? Yeah. NU's already taken that low, man. NU, Kiwi's leading the way. You're talking about this low over here, right? Yeah. Look at NU. NU's already taken it. So that's why I'm hammering sells on AU and NU. That's why it's on today's list. Yeah. Most definitely I'm looking to short the bejesus out of AU and NU. And same thing goes into this. Like I was really hoping that this was going to be a redistro and we'd get some kind of manipulation. I think we still can. Like if we don't break these lows, I think maybe we get up here and I think we get the old Frankfurt or London manipulation to then break this down. So that's something I'll be watching. I don't think we get up here. I don't think there's enough to get price up there. But it is something that I would definitely be watching. And target wise, same thing. Like I am looking to take some partials once we get into this area right here that caused this break. But once we get out of this, like once price can break through that, I mean, we've got a massive run to the downside. From where we're expecting, we're talking about 780 pips of smooth sailing. We're talking about something along the lines of like this move here that took 59 days and went 900 pips, something very similar to this going on here. So that's something I'm watching, both NU and AU for shorts. I'm going to be, again, I don't need to catch the top. I just need to make sure we get, if we're not going to be in premium, I need to make sure that we're at least in the down cycle. All right. Yeah. And then, so we talked about that. UCAD's the other one, right? UCAD is the other one. And UCAD's looking very, very bullish to me. I'm liking, obviously we're still maintaining order flow. I'm liking where we're at. Canadian dollar showing a little more weakness than anticipated. So that's why UCAD is really just driving, right? Remember, UCAD isn't driven by the US dollar. It is driven by the Canadian dollar. So, the news, I don't know if anybody paid attention, but this bad boy the other day slams right into 80% of the last unmitigated. Really, really clean price action. And then what do we have? We just have a massive accumulation. So this thing has done exactly what I wanted it to do. And now what I'm looking for is a either pullback or reaccumulation, right? You kind of come over here and there was a really nice little move that happened during New York. However, no follow through, right? We never got a break. So there was nothing really to play back into. What we do have though, is we have a really nice accumulation of orders at the end of New York. And what I'm going to be looking for is if price ends up, let me clean this up just a little. If price ends up breaking out of here above like, what is this? Like the 134.40 area. If we get up above that, and that's where my alert's going to kind of go, then, and I want this to happen during Frankfurt or, actually I'd really prefer Asian to take the high, and then we can come back during Frankfurt or London. So I'm going to be looking for something along the lines of this break up here to come back to mitigate. And I want the mitigation to be either Frankfurt or London price action, right? That's how I'm going to be looking to play this. And of course, if we don't break that, I'm going to be looking for us to come right back down into the other day's news event, right? Maybe sweep out these lows, come in here, give me an accumulation to take this up. And I'll be okay with that. That'd be an extra like 130 pips to get up here. So UCAD, EU, NU, EU are the top of my lists. And this is something I'm most definitely looking to play. All right. Everything else is like, for me, GU, nothing really want to write home about. The problem with GU currently, and I'm still kind of waiting, is where we are, right? We're not in the down cycle, right? Could this be a larger distribution? 100%. But as it stands right now, we have the cause of the break. We have price that came in, tapped into the 80% of the entire reaccumulation accumulated, right? And now is in the process of coming back into that accumulation after breaking order flow. So for me to really get, for me to really start paying attention to GU more than I would EU, AU, or NU or UCAD, we need to not accumulate here. We need to just break through this, So that's the only thing that's really going to get me involved in a GU play at this point, because we are massively bullish still. And until I see some weakness, I'm not gonna jump the line with GU ahead of everything else. What about JPY crosses? What about them? Yeah, what about them? I mean, you could see that there's no JPY crosses on my primary list this week. So give me your take on yen crosses. What's going on with it? Odd and CAJ are in the SC that caused the breaks. Odd and CAJ. So AJ, you're saying, is in the SC that caused the break. Because of this right here that caused this break. Okay. You seeing any weakness yet? Can you explain why UCAD is only driven by the Canadian dollar? Have you looked at the Canadian futures chart? And what's the Canadian? What drives the Canadian futures market? The You think the U.S. dollar? Hold on, we'll come back to AJ. Hold on. So we have the Canadian futures chart. Canadian futures chart is what, being driven by Canadian dollar, right? So here's your Canadian futures chart. And if I pull up UCAD, and invert it, is it not the same chart? So what's that tell us? Tells us that the Canadian market, right? Canadian dollar is driving UCAD. It's what moves UCAD. Yeah. Yep. All right. So let's go back to AJ. Hold on. All right. So AJ. Weakness would be a break of 90.25. Weakness would be a break. No, weakness doesn't have to be 90.25, right? Let's look at this for a sec. I mean, right now, what do you got? You got a possible head and shoulders, right? But do we looking, let's go with the notion that, yep, you got a point of interest here. All right. Let's look on this chart. Any weakness in this chart yet? For me, there's nothing yet. You know, there's absolutely nothing. Now, I figured that this was going to be what takes us down. But what do we end up doing? We just reaccumulated, right? We shook out right there and we reaccumulated. So, I mean, realistically, there's nothing that gets me involved in AJ at this point because I don't see evidence of sellers coming into this market. You know, this for me was the attempt. And at this point, like what I want to see is I want to see some sell orders coming in, and I want to see them really give me the confirmation that they want to take this down. Now, what's going on with the yen futures? Before you even look at AJ, right? What's going on with yen futures? So like before we even take a look at what some of these yen crosses are doing, I'll tell you right now, yen futures is why I'm not even looking at yen pairs right now. So what do we got? Right? For me, do I have it marked out already? Hold on. I guess not. Maybe not. All right. So for me, I thought I had it marked out. Maybe I did, and this thing just got moved because this was over here. Yeah. All right. So for me, I'm not doing anything until we get here. Right. This is where I want to see what happens with yen futures, because if we start to accumulate here, which is the cause of this break, what's that going to do to everything that's XXX JPY? Yeah, we're going to go bullish, right? I mean, we definitely are going to be, we're definitely going to be, obviously not every pair is going to do it because you're going to have some of those pairs that are just not going to be diametrically opposed to it. But I'm not going to, like, the one thing I don't want to do is I don't want to trade, let's say, a UJ, right? Well, it doesn't really matter because UJ is diametrically opposed. So UJ is going to be the complete opposite. But let's say you've got a strong yen and you've got a strong pound, right? I don't want to sit there and fight GJ when I can turn around and say, well, wait a minute, we've got a strong US dollar, which means we have a weak euro, which means a weak euro and a strong Japanese yen. I'm looking for shorts on EJ. Does the chart show me where I can work these shorts? All day long, I'm taking shorts. You know what I mean? If I can find the technicals to line up with it. So, yeah, I mean, that's why I'm not interested in doing anything with yens, because we're still going to see in my opinion, a small depreciation on the yen crosses. And, maybe we can get through this and we can get down into this move over here, you know. Um, but I'm not going to sit there and fight it, because the yen right now is being manipulated by the Bank of Japan, right? We're seeing monetary policy in place so that the yen ultimately strengthens itself. So if these things are being done, I don't want to try and fight it. You know, I'd rather say, all right, yens, you sit on the sidelines. I know the dollar's going bullish, so I'm just selling AU, NU, and EU, you know. So that's kind of my thought process with AJ. I mean, is it on face value? Is it are you in a right point of interest? Sure, you're in a right point of interest. Yeah, absolutely. But going into that, I mean, and you can kind of see, like, I was working this down. But oh, that stupid yapping dog, man. I just never got anything after that. Like, once we got this move the other day, like, it was done for me. And I've got to sit back and wait. I've got to sit back and wait for us to really get some more sellers in this market. And if you look at NJ, right? Give me the opinion on NJ intraday structure. So your intraday structure, you're bullish from down here. Yeah, you're bullish. Maybe the 12-hour we got to go to. Yeah, I mean, where are we intraday now? Hold on. Let me hide all this mess. So we're here in higher time frame. Yeah, I mean, your intraday structure point is going to be your intraday structure points here. And your lower time frame structure is, I'm guessing that if that's the break above here, then it's that. If not, then it's this right here. So, I mean, your higher time frame bullish, your intraday bullish, your lower time frame bullish on NJ, and Kiwi's the one that's supposed to be leading. You look at AU and NU, you look at ACAD and NCAD, Kiwi's definitely the leader, and you're not even getting weakness on that. So, yeah, and NJ is nothing I want to really even mess with. Speaking of ACAD and NCAD, though, I am still definitely interested in what these bad boys are doing. I'm looking. So I am looking. Actually, we already did, man. Look at that. Damn it. We did. We had a nice little redistro here. Oh, that's why. I'm like, man, I thought I had markings on this thing. There we go. So yeah, I was anticipating same thing, the redistro here. Maybe we come back into play into this news candle in here. Ideally, I would have liked to have seen something here, maybe a sweep before coming lower. Does that really change anything? No, but I'm just going to play continuation move on it. You jump over to NCAD, NCAD, same thing. What am I waiting for? I'm just waiting. Maybe we get up here tonight. Maybe this accumulation going on now gets us to at least come into here during Frankfurt or London so that I can short this down. I'm still very, very much bearish on ACAD and NCAD. And, this gave some really, really clean price action to really take this down. We'll see. We'll see what happens with it. But yeah, this redistro within the redistro is what I want to be playing on ACAD and NCAD. CAD Chef, I'm not doing anything with right now. It's just in the middle of nowhere. So I'm not interested in doing anything. But gold, I threw gold on the watch list, I think yesterday, took gold. It didn't give me anything that I wanted. I mean, we were looking at sells all day long on it, but I wanted to play redistros and it just didn't give me anything. You can kind of see here was my thought process and what I wanted to see happen. And I mean, to an extent, sure, it happened. News comes out, we break, we come back in, and we sell off, but it just didn't give me an entry. And I was really hoping to get up in here, which wishful thinking on my part. We're not seeing that. Metals, I feel like metals are just going to collapse here. Maybe we get something going on here where we can get maybe a spike up and then we sell it off. That's kind of how I'm going to be looking to play this. But I am looking potentially silver and gold shorts. I'm not going to be selling silver just because I don't have a broker that can give me a decent spread on it. But that's kind of my thought process. It's a very small watch list, just because, I mean, dollar crosses are really going to are really telling me what's happening. And if I've got clean price action, I don't need to do anything else with it. So why are metals not being used as safe havens like they used to? Honestly, I don't know. People aren't treating it as safe havens right now. I honestly think it has to do with the, and this is just my opinion, right? So when we think of safe havens, right, in the metal world, we actually think of, and this is exactly what I did over the last like 4 or 5 years, is buying physical metal, right? Buying physical gold, buying physical silver, right? And I can tell you one of the main reasons that I stopped personally buying physical metals, I stopped maybe about a year and a half ago. And I mean, I will continue to buy some more as we get into the price points that I want, specifically silver. But the main reason I stopped is I just ran out of room. I ran out of room of storing it. And I think, especially when you have the ability to go risk off, and here's, let me look at it like this. So you have something like gold right now, right? What would be in this gold in, where is it? Hold on. Let's go up to like the daily chart. So you have gold right now that, to get back up to all-time highs, would be a 13.4% appreciation, right? Which is a nice number. All right. But what assurance do we have that gold's going to go to all-time high in the next, say, 12 months? What do we have? Are there assurances? Are there guarantees in the metals market? On top of that, are there intangible things that we have to look at? For me, what's the main reason I stopped buying physical metals? Because I ran out of storage. I don't want to pay for more storage. I don't want to pay, out of this 13%, I don't want to have to pay a cut of that for storage. Now, what is something that is guaranteed, right? What is something that has probably the best guarantee in all of the market? Well, you can come over here and you can purchase a bond, right? You could purchase a bond that's sitting at 4.629% right now. And you can lock that in, and that's guaranteed. So when you look at what's happening, when you look at what happened during COVID and the aftermath, where did people that needed to hedge their risk on investments, where do they dump their money? Where do they put money that they can almost say can guarantee them a hedge against any losses? And on top of that, give them a pretty decent financial, some sort of financial win. And it's the bond market. For me, it's, again, it's guaranteed. Like what is the only thing, right? What is the only thing that you have to worry about when you secure, let's say that, and we'll talk about the 2-year, right? When you secure a government backed bond, what's the only thing you have to worry about in the off chance that it is not going to be, it's going to be useless, right? What is going to make it useless? What would make it useless? Yeah, the collapse of the US government. That's what's going to make it useless. You know, it's probably one of the better bets to hedge against because, I mean, yeah, the profits from that bond are taxable. The profits from anything are taxable, my man. Anything. Yep, they're all taxable. Okay. So with that, we're seeing what? Appreciation in the dollar. We're seeing appreciation in the bond market. So what does that tell us when it comes to what's going on indices, right? What do we see going on here? And just on the short end of it, let me hide all the drawings for a sec. Just on the short end of it, I mean, what can we, obviously this was news, right? But notice the reactions that we're getting on this thing, man. We are getting some really, really good large volume sell orders coming in. And I don't know, again, I'm not going to try and call the top. And I mean, just, for me, what I'm not trying to buy equities. I'm not trying to buy indices. What I'm going to be solely looking for is the shorts because it is so much easier to short indices. I don't know how many of you guys have really held shorts more than, 15, 20 minutes, but it's so much easier to hold for a day or two shorts on indices than it is buys. And that's what I'm going to be looking for. I am anticipating, hopefully, that, and I don't even know what happened today because I was doing other things. Actually, I'll show you guys a quick video. Maybe you guys can use this to your advantage. I definitely did. So I'll show a video. What I'm anticipating, right, is I am anticipating that we come back up into the news, or well, yeah, I mean, I am going to be anticipating us coming back into the news. I feel like we're going to trade up a little higher. I feel like we're going to get above this, and what we do during London is going to be pretty much the game plan for me going into New York. I'm only going to really be looking for this during New York, but I'm going to be looking for shorts. And ideally, I'd like to see if we can even get up here. I'm not too worried about this break here because these two over here did it already. So NAS broke that high. Yeah. But this high doesn't mean anything to us, right? Like if you come, remember, highs and lows don't mean anything. Look at where NAS is. Look at where NAS is. What do we see? What do we see? Yeah, we're in premium and we're also in a distribution, right? We are here. We are here. What do I want to see? I either want to see another push down or I want to see this to be the UTAD, which then potentially I'm really hoping we can play into this right here, right? Or even if we come into this redistrict, actually, do I have that marked out? Hold on. Yeah, there we go. I really want to see, can we tap into this 80% or even something in here? I'd like to see if we can get into that. I don't know if we're going to. But what I want to see is I want to see some kind of manipulation. It'd be fantastic if we could sweep this high. Because what is this high? What is this on value right now? What is this high maintaining? Diddly squat, nothing. Means nothing. But if we can sweep it out, take out weak-handed sellers, then maybe we can get this drop, right? Then we can potentially get that drop. Same thing goes into like SPX, right? Look at where SPX is. There we go. Same thing, right? Forget about all these like highs and lows. The only thing that matters is we're here, we're here, we're here, right? So whether one or both of them do it, I don't care, but I want to see one of them at least sweep that damn high. And then I can start shorting it, because I'll tell you right now, if I can get the short, my very first point of interest, my target is going to be here and then here, right? That's what I want to catch. I want to catch this. What is it, like 600 points? I want to catch that. So yeah. And again, I didn't really see what we did today. Hold on. Let me just see what we did today. Yeah. Like when you look at the 15-minute, this just looks like garbage. I mean, you don't really have much. You have a distro, but just look at the volume in here. Volume's garbage. Yeah, it's crap. It is crap. I feel like the play on indices is going to be higher time frame with the manipulation. That's what I feel like we're going to do. I feel like we're going to sweep out on one of them. I don't think we're going to do it on both, but I feel like we're going to do it on one. Yeah, I mean, I honestly will just wait for what London brings and then go from there. What did U30? Hold on. What did U30 do? Yeah, U30 didn't do much either. It came on the 80 on SPX, but on intraday play yesterday, the 80. I mean, we definitely accumulated in here, and I was kind of hoping. So this is what I was kind of hoping for this morning. Was the thought process was this was the redistro that was going to break this right here, right? Crossing, look for shorts. I was kind of hoping this was the redistro that would get us, but we never got anything. Yeah, it is all just order flow. It's all madness. But so while we're on US 30, I'll share this. So how many of you guys trade on an 8-cap broker? So like TFT, right? The funded trader, like Leveled Up, like Next Step, like First Class Forex. Any of you guys trade on okay. So I'm going to share this video. So this morning, and this is going to be crazy, man. Hold on, let me pull it up. So this was me this morning, trading one of my bots, and I'm going to play the video. Hold on, let me see if my sound is up. Yeah, I'm going to play the video real quick. Hold on. So, and we'll talk about it. So here's me this morning, and just pay attention to the candles. All of these charts are the 1 minute time frame. So the 1 minute chart. Do you see how it's 2 minutes behind? 2 minutes behind. So I actually caught. I'm gonna back it up. Hold on. I'm gonna back it up to right here. So because this and this hasn't happened yet on 8-cap brokers, I was telling my bot to essentially buy, just keep buying all the way up. And this ends up coming all the way up. This was, you could see this is on Eastern time. So this is about 10 o'clock in the morning. And yeah, I mean, I was just killing it. And you can see, yeah, look, here's one of my accounts that I'm just taking buy limits. And yeah, it is crazy delayed. Crazy. It was 2 to 3 minutes. Yep, it was a 2 minute lag. So the bot that I actually traded that on, I mean, it was stupid, man. Like I was working on a next step challenge, dude. I passed that with flying colors. Where's my, hold on. And I'll show you just today alone by playing, what the heck? By playing the delay. Let me let me I'll show you the demo account that I had one of, because I always like to trade on some of these demos as well. The demo account, this is what it profited just by playing the delay with my bot. Hold on. I made oh, hold on, where is it at? Come on. Where's the daily? Oh, here it is. Okay. So I made so I was at 18% and I went to 35. So I made 17% on just that. That's why I questioned on our chat this morning. Charts looked weird. Yeah, man, dude, I used it. I was pretty much stopping the bot, turning it on. Dude, one trade was like, I don't even know. It was, I was risking, dude, what was I risking? Hold on. I'll tell you right now. Well, here, history. Hold on. So I was risking $8. I was risking $8, and hold on. Oh geez, dude, there was a bunch of trades. Hold on. Let's see. Where's the big ones? You could see, let's see. Yeah, you could just see a bunch of 230s. I caught 389s, 144. This was all those impulses. But yeah, it worked itself in, 585. That was one of the big jumps. Dude, I literally was just playing in between it. And you can see the last 2 days. I mean, it did it yesterday and I thought it was a fluke. It did it again today, and I was like, all right, sounds great. I'll just keep playing the damn thing. So over 2 days it made 35%. So yeah. Yeah, very, very nice, man. Only so that was the only chart I was watching was US 30, because I was using, it was specifically a bot to trade on US 30. So, and that's kind of how I played it. Yeah, I honestly didn't talk about, yeah, dude, it was like manual arbitrage. That's what it was doing, man. Manual arbitrage. So, I just literally, so in here, I could tell you right now, like in here, because I was on the 1 minute chart. Yeah, here we go. So on the 1 minute chart, like when I saw us take off here, that's when I said, all right, when we were dancing around in here, I took the buy. When I saw this take off, I was like, we were dancing in here. All right, I took the buy, just kept buying, buying, buying. Came in here, took the buy, just kept buying. And then, when I saw us sell off, I took the sell. And then in here, I kind of just waited. I was waiting, 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 waiting. So you get nervous to use EA. Oh, it depends on the EA you got though. I mean, yeah, it all depends on the EA. I mean, yeah, yeah, I run a lot. We got a couple, yeah, yeah, yeah. As long as you can protect it, as long as you, yeah. So there's a lag between MT5 and trading. Yeah, yeah. It's not a lag between MT5 and trading view. It's a lag between the broker and another broker. Remember, they're CFDs. So there was a lag between, and I was using the FX feed. There was a lag between them and 8cap. So I used it to my advantage. Very nicely. So Mike would have to end this. Yeah, bro. It was, yeah. So you utilize that. I mean, you got your chart up and you start to see, you start to recognize that, man, I mean, listen, 2 minute delay, 2.5 minute delay is like an eternity. And if you've got, I mean, if your broker is lagging behind, you put yourself, especially if you're using like how we use the PSC. If you're using a PSC, you're already protected. Just put your stop loss at the bottom. Buy market, man. Let that sucker ride. So, yeah, it is what it is. But yeah, no, that's that. It was definitely something that I haven't seen. I mean, not that I've traded a cap a lot. I only have, what do I have? I have TFT on a cap. I've leveled up, and now I have next step. So, and if they're going to give me that, which makes sense too, because I was getting a lot of lagging on some of the arbitrage stuff that I was doing. So there's definitely some kind of disconnect going on, well, I'll have to look more into it, but yeah. So yeah, that's pretty much everything. I mean, that I had, everything I was kind of looking at, again, it is dollar driven, dollar index with these bad boys right in here is what I'm going to be focused on. Anybody else have anything else they want to look at? Any other questions? You got it, man. Absolutely. Yeah, bro. Sounds good. Well, listen, thank you for hopping on. You got it. Yeah. Same. Next week it'll be Tuesday. So it's just because of Valentine's Day here. But yeah, absolutely. I'll catch everybody later. Thank you for hopping on and have a great one.